Ladies and gentlemen, good day and welcome to the Ahluwalia Contracts India Limited Q4 FY22 and full year FY22 earnings conference call hosted by Anand Rathi Shares and Stock Brokers. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. I now hand the conference over to Mr. Meet Parekh from Anand Rathi. Thank you, and over to you, sir.
Thank you, Inba. On behalf of Anand Rathi Shares and Stock Brokers, I welcome everyone to Q4 FY22 and full year FY22 earnings call for Ahluwalia Contracts India Limited. From the management side, we have Mr. Shobhit Uppal, Deputy Managing Director, Mr. Vikas Ahluwalia, Full-Time Director, Singh, the CFO of the company. We will start with the opening remarks from the management regarding the industry, the result, and post which we will open up for an interactive Q&A. Over to you, sir.
Thank you, Mr. Rathi. Good afternoon. Welcome, everybody. Ahluwalia Contracts India Limited has announced the financial results for Q4 FY22. During Q4 FY22, the company has achieved a turnover of 730.86 crores and a PAT of 42.35 crores in comparison to a turnover of 761 crores and a PAT of 37.06 crores in the corresponding quarter of the last financial year. EPS of the company for Q4 FY22 is rupees 6.32 as compared to 5.53 in Q4 of FY21. During Q4 FY22, the company's EBITDA margin is 10.25% as compared to 9.63% and a PAT of 5.79% as compared to 4.87% in the corresponding period of the last financial year. During the year ended on 31st March 2022, the company has achieved a turnover of 2692.47 crores and a PAT of 155.26 crores, as in comparison to a turnover of 1982.19 crores and a PAT of 77.24 crores in the last financial year. EPS of the company for year ending 31st March 2022 is rupees 23.18 as compared to 11.53 in the last financial year. During the year ended on 31st March 2022, the company's EBITDA margin is 10.61% as compared to 8.91% and a PAT margin of 5.77% as compared to 3.90% in the corresponding period of the last year. Net order book of the company as on 31st March 2022 stood at 5870 crores to be executed in the next 2 to 2.5 years. Total order inflow during the year ended 31st March 2022 is 1267 crores. We are L1 in 2 projects totaling 1250.84 crores. We are ready to take questions now. Thank you.
Thank you. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Shreyans from Equirus. Please go ahead.
Hello?
Shreyans, your line is unmuted. Could you go ahead with your question, please?
Yeah, sure. Thanks for the opportunity. So just wanted to know the guidance for FY23 in terms of revenue and EBITDA margin.
15% top line growth and EBITDA margin should also be in the region of 12 to 13%.
12 to 13%. Sure. And so during this quarter, did we have any one-offs?
No.
Got it. Sure. And sir, in terms of CapEx guidance for FY23?
it should be in the range of about 30 crores.
30 crores. Sure. And so lastly, in terms of Central Vista project, we've been given to understand that, one of the projects has been cancelled. So just wanted to understand that. And secondly, what is the opportunity size still left in that, in that entire stretch now?
Yeah, as the tender has been cancelled, that knowledge is in public domain. So
Right.
Your information is correct. It is being retendered. And
Okay, so will we be rebidding for it?
we are still deciding.
Okay, sure. And sir, in terms of the opportunities still left for the Central Vista?
I think the situation as it is unfolding, it's yet not very clear. But in the immediate future, I think there would be tenders to the tune of about 3,000 to 4,000 crores. When I say immediate future, I mean in the next couple of years.
Got it. Sure, sir. Thank you and all the best.
Thank you.
Thank you. Our next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good afternoon, sir, and thanks for the opportunity. So my question is, sir, how do you see the order inflow in FY23? We are left with roughly two times FY22 revenue as the order book. So for the growth, I think we need a substantial number in FY23 to grow in FY24.
Mohit, during the last call, I had given a guidance of an order inflow about 2,500 crores to 3,000 crores. We stand by that. I had also mentioned that we were deliberately being conservative on account of a couple of factors. One, increased competitive intensity, coupled with in the inflationary market. So going forward, we see the commodity prices stabilizing, and also in the latter part of this financial year, I expect the competitive intensity to also, become better. So we stand by our guidance given earlier.
Any color on this order opportunity basket available in FY23?
So primarily public sector. Our focus remains on the public sector. Private sector, there are green shoots. So maybe out of this 2,500 crores, we expect about 20% to come from the private sector, from our existing clients. We continue to be wary of taking on new clients, especially in the residential sector, in the private sector. As far as the public sector is concerned, more of the same, hospitals, education, and institutional buildings.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants to ask a question. You may enter star and 1. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you. Sir, just wanted to know, particularly on the EBITDA margin, anything has happened, because this quarter we have seen again on QOQ basis the EBITDA margin is coming off again. But so what was any specific reasons, and are we now confident that 12 to 13% for FY23 is achievable, or we can see a first and second quarter maybe a lower margin because of the increased commodity prices?
As I said, in this quarter, our EBITDA margin is 10.25%. So that, is in spite of, there is a slight improvement from the corresponding quarter of the last financial year, in spite of, as you yourself mentioned, the inflation has hit us. So yes, the first 2 quarters would be along the same lines, but overall, I think we stand by our guidance of 12 to 13% as far as the year is concerned.
Okay. Secondly, sir, last time we said we can do a 20% kind of a revenue growth in FY23. Now we are saying a 15%. So are we seeing any slowdown in it?
No. Shravan, last time also I said 15 to 20%. Now also I'm saying 15 to 20%.
Okay. Okay. Second, sir, in terms of the two L1 projects that you have mentioned, so which are these two projects?
One is NIT Patna, that should be awarded to us in the next 2 weeks. That is 526 crores. The other is the Tata Memorial Hospital in Mumbai, which is about 710 crores, which it's taking a bit of time. I think we are expecting it to be awarded in the next month and a half.
Okay. Sir, we were also L1 in Mumbai custom project of 1100 plus and one Muzaffar hospital from Tata.
Both those projects have been cancelled because the bid price, though we were L1, the bid price was far above the estimate price. So the projects, those tenders will be recalled.
Okay. Okay. Sir, I need a couple of data points, order book segment-wise, government, private, region-wise, fixed price breakup.
Satbir will answer them.
This is segment-wise. This is the hospital, 43.5%. Infrastructure, 11.5%.
Sorry to interrupt. Mr. Sadbir, could you come a little closer to the device and speak, sir? We can't hear you.
This is hospital, 43.50%. And infrastructure 11.5%, institutional 20.90%, residential 17.96%, and commercial is approximately 6%. And
sorry, sir, commercial, can you repeat?
this is 4.98%.
Okay.
And the hotel is 1.17%.
Okay. And in terms of the government, hello?
Yes, government is 84.38% and private is 15.62%.
Yeah, and in terms of the region?
That's east 45.45% and north 35.86%, west 17.83%, whereas south is 0.85%.
And how much is the fixed price, sir?
This is approximately 15%.
15%. Okay. And sir, what's the number for mobilization advance, retention money, and unbilled revenue?
Yeah, this retention is 180 crores and debtors against bills is 487 crores. Total 667 crores. And mobilization is 203 crores. And unbilled revenue is 251 crores.
151 crore. Okay. So, which sir, in terms of the working capital days, is there any pressure are we facing in terms of the payments from any specific client, or are we expecting a further improvement?
We are expecting a further improvement in this quarter. And if you were to see the figures which the base will just tell you.
This is working capital days was in last quarter 89 days, and now this comes down to 73 days.
Oh, that's great.
And as I said, it will further improve.
Yeah.
Okay, that's a great thing, sir. Sir, in terms of the overall total bid pipeline size, so you mentioned that focus will be on the public 20% we are expecting from private, but in terms of the size, what would be the total bid pipeline size as of today?
So it would be about 7,000 crores. The tenders that we are to submit in the next 1.5 to 2 months.
Okay. And sir, any update in terms of the land monetization which we have in Kolkata? Anything, any progress?
Not in the immediate future. No.
Okay. That's it from my side. Thank you and all the best.
Thanks, Mr. Ravan. Thanks.
Thank you. We'll take our next question from the line of Rajat Sethia from iThought Portfolio Management. Please go ahead.
Hi, thanks for the opportunity. My first question is about the fixed price order book, which is 15%. So what is the kind of margin impact do you think these orders will have, and when are these orders going to be executed?
These orders will be completed in this calendar year, and the margin impact on these particular projects will be to the tune of about, we will take a hit. Our profitability will be halved. So the margin, the hit will be to the tune of about 4 to 5%.
Okay, so basically अगर हम 12-13% बनाने वाले थे तो maybe we'll make 5-6% on them, right?
Yes, yes.
Okay. And so why was this Central Vista tender cancelled and it is coming up again? What really happened?
Must have read the newspaper. No, what the value, if you've seen the value of the tender package has gone up by about 200 crores. So it seems that they have added certain components like ICT and also increased the area somewhat. So they felt that the earlier tender was not an accurate reflection of what they were ultimately going to make. So they recalled it.
Okay. And this time around, are we seeing any idea on the competition, like how many people were tendering, bidding in the first time, and how many people will be bidding now? Or do you expect the competition to be the same?
Evaluating that only. Earlier on, 4 companies were pre-qualified. So now, they're doing the entire process again. So we are yet not clear how many will be added to these 4. So we are evaluating our options, and because of the nature of the project, as I mentioned earlier, we are still not clear whether we will bid again or not. So we are still doing our due diligence on this.
Okay, understood. And so any stuck orders, like non-moving orders?
No, now the projects which were stalled are also moving fine. We've broken ground on the Patna Veterinary University project also, Agricultural and Veterinary University. That's a large one. So that was awaiting environmental clearance, which has come, and we have broken ground there. So, and the auditorium project in Calcutta, which incidentally is one of the fixed price contracts, that is slated for completion in September. So that is also moving full steam ahead.
Okay. And the competition that we are seeing that it's increasing. So earlier in your commentary, you used to specifically mention that order sizes below 200 there is high competition, and above there is less. So are you seeing competition right now across order sizes, or is it again high in certain categories and low in certain categories?
So now that 200 figure has become 500. In orders up to 500 crores, the competitive intensity is high. But what we're beginning to see is that a lot of people in the mid-sized segment, they have burnt their fingers. So now there is a bit of discipline when the bidding is there, where all these people, the mid-sized companies are participating. So as I predicted, over the next 3 to 6 months, I think there will be more discipline as far as bidding is concerned.
Sure. And so one final, on the CapEx side, over the last few years, we have been spending 20-30 crores on an annual basis. So going forward, do you think we would have to spend some big CapEx at some point in time, or that is not required in our business? That's not the nature of the business.
So over the years, over the last 2-3 years, we've been steadily, a majority of this CapEx is in replacing old defunct equipment. So I don't see, that's why I projected the CapEx of 30 crores. I don't see a substantial increase in this number in this year also.
So this question is more from the perspective, let's say next 5-6 years, that is this the kind of capex? So capex right now on a 3,000 crore top line, we are saying 30 crores. So do you think this kind of run rate will go in line with the revenue growth, or you think we will have to do at some point in time big capex as well?
It will increase. If you're talking about the longer term, it will increase.
Yeah.
Yeah.
In line with the revenues?
Yes, in line with the revenue. Yeah.
Okay, understood. Thank you so much, sir, and all the best.
Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. Next question is from the line of Parikshit Concall from HDFC Securities. Please go ahead.
Hi, sir.
Hi,
Hi,
Parikshit.
Just joined a little late in the call. If you can just tell us what's the total order backlog? Sorry, I missed that number.
5870 crores.
And can you repeat the L1 number?
1250 crores.
Okay. So just on these margins, I think we have been saying till last quarter that the margins are now normalizing, and again we have a negative surprise on margins in this quarter. So, and you were saying that another 2 quarters the margins will remain muted. So we were very well aware that the commodity prices are at elevated level in the third quarter call. So why is it again getting extended by 2 more months? So are we not getting our escalations which is there, or so what are the reasons why we are still lagging on getting back to the normalized margins if we have only 15% of legacy order book on a fixed price basis?
Parikshit, the situation is there for all to see. Nobody expected that the supply chain will continue to be so badly affected. Nobody expected that the war, which is one of the key reasons for the pricing level continuing to go up. Nobody expected it to go on for so long. So, but having said that, keeping the inflationary trend, I think the EBITDA margin is in line with what I had projected. When you say it's negative, I'm sorry, could you clarify that?
No, sir, I'm saying we were looking towards more. 1 second. Sorry, sir. Sorry for that. So I was saying that we were moving towards more quarterly kind of a normalized number of 12 to 13%. So I was referring to that.
If I take you back to my last call, I had said that in the second half of this financial year, the numbers will improve substantially. And even if you were to compare, in spite of the inflationary pressure, our EBITDA margin is up by nearly 0.6, 0.7% in this quarter.
But we expect that second half of FY23 it will be more like coming back sharply up. And for the full year, 12 to 13% is still maintained that we'll be able to deliver on EBITDA margin.
Yes.
Second question is on, sir, again, which I keep asking every time on the call, that on the private real estate, so sector seems to be doing well. So any change in thought there? Are we looking to come back there? So if you can just touch upon that.
Residential still does not excite us, but commercial, the order pipeline that I mentioned, 7,000-8,000 crores, there is, out of this, about 20% is private commercial real estate exposure.
Okay. And what about the southern markets? I mean, where are we looking at? Because that's a big market for the private commercial real estate on the office side. So any thoughts to ramp up?
Sometime during this year, latter part of this year, we are looking to extend our footprint there.
Okay. Okay, sir. Great. Those were my questions. Thank you and all the best.
Thanks.
Thank you. Our next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity. Sir, just wanted to check if there are any slow-moving orders in the order book.
No, as I mentioned earlier, most of the projects, now all the projects are moving fine.
Okay. And secondly, on the cost escalations, so are we, let's say, based on the indices which exist today, are we getting a fair amount of pass-through of the increased costs, or you think the indices are lagging significantly at this point of time?
The indices are lagging at this point in time.
Okay.
Yeah. So what we are getting is about 60% of the actual cost which is incurred, broadly speaking.
Okay. So, sir, when we guide for a 12 to 13% kind of margin, do we assume that the indices will catch up and hence we'll be able to maintain that sort of margin, or we are building that on as things stand today?
The delta will reduce.
Okay.
That's how we are. The delta in terms of this gap of 40%, this will reduce.
Sure. Right, sir. Okay. Thank you.
Yeah. Yeah.
Thank you. Our next question is from the line of Jiten Rishi from Axis Capital. Please go ahead.
Good afternoon, sir. Thank you for taking my question. Sir, I would like to know about the order backlog position for selected projects. So can you give us the detail of the J&K hospital project? What is the current outstanding order backlog?
In the AIIMS Jammu, the backlog is about 750 crores as on date. The net unexecuted value is about 750 crores.
So what was this on March?
877. It was 877 crores.
Sir, is it possible to give us the top 5 or top 10 order backlog breakup project wise, because we have been missing this data for quite some time now. So is it possible to give us now, just quickly, if it is possible?
So yeah, I told you about this thing, Jammu. Then
so animal husbandry, yeah.
Yeah. So you note down. Then Sion Hospital. This is as on March, right? Sion Hospital is 506 crores.
Okay.
The medical college in Chhapra in Bihar is 201 crores. Bihar Animal Science University 890 crores.
Okay. It is still 890, so we're not booked any revenue.
Yeah, that's just as I mentioned earlier in my call, we have just broken ground there. And Mandale Depot, Mumbai 385 crores.
Okay.
And Gardani Bagh Officers Enclave in Patna 384 crores.
Okay.
Is that okay? I think.
And we had received some affordable housing project in Kolkata, 229 crores. So have we broken ground there?
Yes, we have broken ground. That project is well underway. In fact, that was one of the slow-moving projects because they had not got the AAI clearance, which has now come, and it is underway now. Foundation work.
So what is the outstanding? As on March, it was the same, 229 crores.
Just a second, please. Yes, 244 crores.
The price has gone up. Okay.
The awarded amount was 249 crores, and as on 31st March, a billing of 5 crores has been done there.
Okay. And sir, on the coming back to your Kolkata project, auditorium project, as you said, it will end in September. And obviously our Milan Mela, we were about to end in April. So are we done with Milan Mela, or is that still working?
Yeah, as you would have seen in the news, Milan Mela was inaugurated by the Honorable Chief Minister in April. And now the final billing and we are in the process of handing it over. Yeah.
Okay. So payments are not an issue. Payments are streamlined.
Yeah,
so
on that project, payments are not an issue.
Sir, any payment issue from any of the state governments you are facing as of now, say in Bihar or some other projects, or everything is smooth?
Bihar, the payment cycle is slightly prolonged, but the payments are coming in. Other states, Himachal and Haryana and the other states, Delhi, they're okay. Maharashtra, they're okay.
And sir, any NBCC project we are targeting this year?
So NBCC, as I mentioned last time, we've restarted rebidding, and we are doing the Chamba Hospital project is with NBCC only, where nearly 50% of the project is still left to be done. So yes, we are looking to bid now that the escalation clause and the arbitration clause is there in the tender. So we are looking to bid further.
Sir, just two questions. This Nalanda project, what is the outstanding order backlog, and this
Nalanda 156 crores.
And Z Estate project, there is construction of high-rise multi-story complex Bhubaneswar.
Bhubaneswar, the balance is 294 crores.
209 crore.
294. So
this is also moving pretty slow. So any reason why?
It had stalled in between due to statutory approvals. It has now started. All approvals are in place now.
So you gave a guidance of 12 to 13%, and you said 15% of the projects are slow moving. So this slow moving projects, are we expected to complete in first half, or we can see a spillover in H2?
No, I didn't say 15% projects are slow moving. I said 15%.
Oh, sorry. Fixed price. Sorry.
Fixed price contract. Yes.
Yes. Sorry. Yes, my bad.
So we are looking to complete. As I said, one of the major ones is the auditorium project, which we are looking to complete in September. Yeah, and the other ones by the end of this financial year.
Okay, sir. That's all from my side, and all the best for the new financial year. Thank you.
Thank you. We'll take our next question from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi, good afternoon, sir, and thanks for taking my question. So first question is about the competitive intensity. Now you mentioned that it has been high over the last year, and which is why we have been conservative in terms of bidding, and you expect it will probably improve by the second half of this year. So is this reduction in competitive intensity largely a function of the fact that people have had setbacks due to commodity price volatility, or is it also because the bid pipeline, etc., might be increasing, or you expect more orders coming in future, and which is why you think bidding will be more rational?
So they are intertwined, these two reasons that you said, Parvez. A lot of companies, I don't want to name them, but there are at least 6 to 8 companies who are actually floundering because they picked up orders at very, very competitive pricing, and the commodity prices hit them. You know that the commodity prices compounded their problems. So, going forward, a few of these companies may not survive. A few of these companies the other ones will be forced to bid in a more disciplined fashion. What we are also seeing with the larger players, they are not bidding indiscriminately. So that is why, going forward, I am hopeful that H2 of this financial year, the bids will be more disciplined. And yes, the pipeline is steadily increasing, so especially in the segments that we are present in. So we are hoping that the orders which will come in now will be with decent margins. And the commodity prices also seem to be, on a downward trend.
Sure. And a bookkeeping question for Satbeer ji. What is the total gross debt, and what is the cost of debt currently?
It's as on 31st March, there is 5 lakhs only, and cost of debt is approximately 7%.
Sorry, I missed that number. 7%.
7.25%.
Oh, okay. Sure. Thanks, sir. All the best for future.
Thank you. Thank you so much.
Thank you. Any participant who wishes to ask a question may enter star and 1. Our next question is from the line of Rajat Sethia from iThought Portfolio Management. Please go ahead.
So one small question, I think I missed it. What was the order inflows during FY22?
1,267 crores.
1267. Okay. All right. Thank you.
Thank you. We'll take a next question from the line of Jairam Shah from Equirus Securities. Please go ahead.
Good afternoon, sir. Congratulations on a good set of numbers. So I just wanted one clarification about the margin guidance. So, sir, is it inclusive of the other income?
At the moment, no. This is not inclusive of the other income.
Okay. So, sir, basically, if we see the so this 12-13% is excluding other income that you are saying, the guidance of the EBITDA margins.
This is including other income.
No, but this is only these margins are without other income. So Satir would like to clarify.
This percentage of margin has been declared that includes other income in the profit, but
okay,
not has been taken off the turnover as a percentage.
Okay. So if we see the other income during this particular fourth quarter, then it has almost doubled from our original run rate of 5 to 6 crores. So any kind of return back or something during this quarter?
This is during this quarter. Basically, total other income include this is return back and also some basically liability return back, and also some amounts has been received from that already we have written off as a bad debt. That's also, and there is 11 to 12 crores is every interest is there.
Okay. So, sir, if we do the math of the core EBITDA margin for this particular fourth quarter, then it is largely into that 8.7, 8.8% if we exclude the other income from the EBITDA level, and as compared to our earlier 10% YOY QOQ basis. So, any specific reason to that?
I'm saying that this is basically just margin or percentage of EBITDA that has been includes whatever the other income is there, and but taken has a percentage of turnover only.
Okay, so but if we exclude the other income from this EBITDA, which is like return back or non-cash item thing, so then the margin will be coming to that 8.5 to 9% of line.
That is basically part of the.
That is one way of looking at it. Yeah. No, part of this other income is also dues against the construction done earlier.
Yes. That is not basically.
That is in the long run that will continue to happen.
Because earlier, sir, whatever bad debt has written off, that is also considered for the calculation of EBITDA at that time also.
But anyway, that's what you're saying. Yes, that is right. But what I'm trying to say is that year on year that will continue to happen. Hello.
Mr. Shah, does that answer your question?
I think we've lost.
Yeah, it looks like Mr. Shah is no longer in the queue. I'll just check from participants if they have any questions, sir. Ladies and gentlemen, if you wish to ask a question, you may enter star and 1. We'll take the next question from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah. Thanks for the opportunity again. So just one thing, when I look at our bank balances, which is basically the deposits of the banks, those have doubled from last year. The 90 odd crores has become 187. So is all of this margin money, or these are some of the regular deposits as well?
No, that's also free deposit also including that bank balances.
Okay. So if you can, do you have the details, sir? How much of this could be free deposit?
It's, out of this is margin money around would be 95 crores, and rest
okay. Got it. So margin money doesn't seem to then have increased much. What you see the number is basically on account of increase in the regular deposits.
No, because basically outstanding of the VGs are at similar level, so that's why margin is also.
You're right. Margin money is
right. Got that, sir. Got that. Thank you.
Thank you. Next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
So out of the bidding pipeline of 70 billion or 7,000 crore, how much is the state? Actually, I'm interested in how the ordering pipeline from the states is looking at this point of time, and are we looking to add something on the state side, or is primarily from the center?
So one is seeing the pipeline as far as the states is concerned increasing. So it would be, out of the total 7 billion, this thing, as I said, 20% will be from the private sector, and from the balance, it would be 70-30. 70% center, 30% state.
Understood, sir. My second question is, what is a long-term aspiration in the sense, let's say FY25? What kind of top line you're looking to achieve, and that's the question, sir. Yeah.
Look, these are not times to think so far ahead.
Some broad guidance, sir.
So I have given a guidance of a growth of 15 to 20% of the next 2 years, and then let's see.
Okay, understood, sir. Lastly, on this margin, as the prices correct now, in the sense, so does it improve our EBITDA margin in near term, or do you think this 8.7% which achieved in Q4 is likely to continue for Q1 and Q1 FY23 and Q2 FY23, and it will improve subsequently once our top line starts growing at a higher rate?
Yes, second half of this financial year, it will improve substantially.
Okay, so this
will continue to be felt, at least in the first quarter.
So what is the lag which you generally you see in the indices?
So as I mentioned, it's about 30 to 40%, but this will reduce as we go forward. So in the second half of this year, the lag should be down to about 20%. And
okay,
some lag will remain. Some lag will remain, because though the pricing of cement and steel, there are separate indices for cement and steel, but the rest of the pricing of other construction materials are actually, the escalation is based on the wholesale price index. So that does not totally cover the escalation.
Mm-hmm. Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. Our next question is from the line of Meet Parekh from Anand Rathi Shares and Stock Brokers. Please go ahead.
Yeah, thank you for the opportunity. So, on the mobilization advance, how much of it is interest bearing?
This is a 203 crores, and out of which 30% is interest free.
Interest? 30%?
About 60 crores is interest free.
Okay.
Rest is about 140 crores is interest bearing.
Okay. Sir, on the pledge, now with almost zero debt we have, what is the reason for the pledge we have? And by when do you expect to reduce it further? Reduce it down?
Yes, you will find that within this quarter that we have already squared up the limits with the Punjab and Sindh Bank. That is a major holding pledging the share with this bank. This is around 50 lakh that would be released this quarter, and rest there would after be 47.95 lakh share, and we are planning to get collateral free within this year.
Okay. And lastly, sir, on the if you can list some projects for which you will be are they in the bidding pipeline? Some of the major big ticket projects.
So we are bidding, without naming the client, we are bidding for a slew of data centers, because that seems to be an upcoming field. We are bidding for a couple of hospitals in Bihar. We are bidding for a data center for Punjab National Bank also. We are bidding for a central university project in Himachal. We are also bidding for a fintech institute for the government of Rajasthan. And we are bidding for 3 hospitals for the government of Assam. And on the private sector side, we are bidding for DLF as well as Bharti Realty.
Okay. Okay. That was it from my side. Thank you. Thank you, sir, for taking my question. Do we have anyone else in the line?
No, sir, there are no further questions.
So you can hand it over to the management for closing comments.
I would now like to hand over the call to the management for closing comments.
So thank you, everybody, for patiently listening to us. And if there are any other questions, you can reach out to Sadhbir directly or Sudhanshu from our IR team, and we will reply as soon as possible, and hope to talk to you guys again at the end of the next quarter. Thank you. Bye.
Thank you. On behalf of Anand Rathi Shares and Stock Brokers, that concludes this conference. Thank you for joining us. You may now disconnect your lines.